So every day that we approach the market and we risk our hard-earned money, we need to come into the market with a trading plan. We need to trust that plan and we need to stick by it no matter what happens on the market. We need to accept when we're right. We need to accept when we're wrong. We have to live and die by our trading plan every single day that we approach the market. Approaching the market without a plan, without a strategy, reduces your chances of success probably to less than 1%. So in my opinion, this is one of the major keys to any trader having success. In today's video, I want to break down exactly how I build my trading plan every day and where that trading plan begins. For me, that trading plan begins on the futures contracts, on the S&P 500, on the NASDAQ futures, understanding my levels, knowing where am I bullish and where am I bearish. What level am I watching to remain bearish? What level am I watching to sort of flip back to the upside? What are those if-then statements that I am building every single morning to build that trading plan? So in today's video, I'm going to break that down. How do I build that? How does it lead to my decisions on my intraday trades? If you enjoyed today's video after watching it, press that like button for me, subscribe to the channel. Let's go ahead and jump right into it. So today was a pretty interesting day. I ended the day of $1,200, but at one point I was down almost over $600 on the day. Now, the only reason I come out of today profitable is because I stuck to my trading plan. I didn't micromanage. I didn't get nervous. I didn't deviate from what I believed in on the NASDAQ and on the S&P 500 futures. I had Netflix puts, which were a larger position for me. Those were red, which turned very green. I had Tesla puts. Those were red, which turned very green for me as well. The only reason that I stayed green on these positions, or I ended green on these positions, is because of what I was seeing on the S&P and the NASDAQ and the trading plan that I was sticking to. So you guys see here, this is the NASDAQ. This is on the 15-minute chart. And as you guys know, I trade the break and retest, and I will always watch the previous day low and the previous day high on the market. Now, yesterday, the previous day low on the NASDAQ was this 13,880 level. You guys can see that right here. This was a low that formed yesterday on the market. So if I'm coming into today, if I'm coming into the next day, if the market is trading under the previous day low, there is no reason to be looking for upside, right? That trading plan has to be, if the NASDAQ is under previous day low, then I am going to be looking for downside. That is where risk reward makes sense. That is when we're actually trading off levels and trading off the levels that are on the market. If the market is trading under previous day low, then I can't be looking for upside, right? Why would I be looking for upside, trading upside back into the previous day low? That does not make sense, right? In regards to my strategy, which is the break and retest, in regards to supply and demand, that is not a trade that makes any type of sense, and we have to come into the day understanding that plan, right? So my plan into today was, if the NASDAQ, which it was at pre-market, if the NASDAQ rejects previous day low, I am only looking for downside, right? There is no reason to be looking for an upside move if we are rejecting that previous day low. I also said to the group that if we get back above that previous day low, if we start to hold above it, then I would flip to the upside, right? So those were my if-then statements. I'll go ahead and pop them up on the screen. If NASDAQ is below previous day low, I'm looking for downside. If the NASDAQ gets back above previous day low and starts to turn it into a new demand, then I would potentially be interested in upside, right? This was the plan that I was building before the market opened. And I'm going to go ahead and run a little clip from the live recording of the voice chat in the Discord. You're going to hear me talk to the group about, I don't like the upside, right? I don't want to play upside into previous day low on the NASDAQ and also on the ES, which we'll review here in a second. But let me go ahead and play that recording real quick so you can hear me talk about this in real time. I don't really like playing the upside into 4,200 here, guys. I don't really think this is an upside setup right now. I don't know if you want to play upside into 418 on the SPY and 4,200 on the ES. I don't feel comfortable with that. I'm not looking for upside here just yet. And then the NASDAQ, you'd be trading NASDAQ into yesterday's lows. That doesn't make sense to me. Yeah, I'm not interested in upside here yet. If the NASDAQ gets back over yesterday's highs, then I'll consider it. So you guys heard in that live recording, I was saying, why are we looking for upside into previous day low, right? That is my trading plan. I can't be deviating from that. If we're under that low, we're looking for rejections. And the same thing goes here for the ES, right? So here's the S&P 500, and this right here is that 4,200 level. You guys know, if you pay attention to levels, 4,200 has been a monster level on the S&P 500 futures. Yesterday, we held above that level the entire day, right? We held demand above 4,200 all day. This morning in the pre-market, we traded below it and we pushed back into it. And you heard in that last recording, I said we can't be trading the ES to the upside back into 4,200, right? When we think about risk to reward, that does not make sense. Our risk to reward here is actually to the downside, looking to see if the market stays below that previous day low, turns it into a rejection that is a break, right? And a retest, which is what I talk about almost every single day on this channel. So a break and retest of the previous day low is always, always, always a bearish technical setup. And we're not going to deviate from our trading plan just because we see some type of big candle in the level, just because we feel like the market should go higher. We're not going to deviate from that, right? No matter what happens, we have to stick to that plan and we have to stick to that strategy. And for me, it's that break and retest of the previous day low, which happened on the S&P 500 futures, and it happened on the NASDAQ futures as well. So my trading plan all begins on analyzing the futures contracts. What am I looking at on the futures? Where are the futures trading? Are we above previous day high? Are we above previous day low? Are we rejecting the previous low, right? These are all questions that we need to answer and we need to stick to as we approach trading every single day. You can see it was very clear, right? We rejected the previous day low and the downside came in beautifully. There was never a single point today that upside made sense on the market. Not one, right? Not a single time today did the market even try to get above the previous day lows on the S&P 500 and on the NASDAQ as well. All we did was bear flag into the previous day lows on the NASDAQ, and all we did was bear flag into the previous day lows on the ES, never setting up any type of reason to go long if we are focusing on a trading plan, on risk to reward, and trading supply and demand levels. If we're just coming into the day and we think the market should go higher because that's what I woke up feeling like, that's where the success starts to fall off, right? That's not going to work for us. Paying attention to these levels, building that plan every single morning is the key here. And these are the types of decisions and the type of technical analysis that we have to do every morning to lead to our success as traders. So that was my trading plan, right? As long as we're under 4,200 on the ES, I'm bearish. As long as we're under 13,880 on the NASDAQ, I'm bearish. But how does that lead into my intraday trading decisions? And for me, I was setting up bearish trades today on Netflix, on Tesla, and on Apple. Now, for these trades, I told the group, if the S&P was under 4,200 and the NASDAQ was under 13,880, I am not exiting puts. I will not exit my put position if the S&P and the NASDAQ are trading below previous day lows. Why would I exit a put position if the rejections continue to creep in at the previous day lows? And this is how I set up my intraday trades, right? This is the mindset that I had in those trades. I don't care what Netflix does. I don't care if it goes up. I don't care if it shoots up 10 points in 1 minute. I am staying in these trades as long as my plan stays intact. My plan never broke today, and I never exited those trades. I didn't exit because I was red on my P&L. I didn't exit because I was scared that Netflix was pushing higher. I stayed in these positions because my plan was if the NASDAQ and S&P stay under previous day lows, the market should remain bearish. So here's Netflix on the 15-minute chart, and I entered puts pretty early in the morning, and I had some drawdown on this position, right? We saw Netflix push to the upside, and I was unrealized red on this position. I had some drawdown, but I didn't exit. Now, why did I not exit? Well, first, the S&P and NASDAQ, part of my plan, that never broke. My stop loss on this trade was the previous lows here and the previous lows here. Netflix never broke back above previous lows. This was nothing but a break and retest of the previous day lows, right? And even though I maybe got in a little bit early, I trusted the plan. The plan was, once again, previous day lows, turn that level into a rejection, which happened absolutely perfect here on Netflix. We pushed higher. I was in a little bit of drawdown, but I stayed in the trade. So you saw that trade on Netflix. You saw that I was red on that position, and I just went ahead and opened my Interactive Brokers, and here is how I ended, right? $1,200 on the day as of right now, up 40% on Netflix. I'm swinging half of my position, or a little bit less than half, overnight, because I still believe that the market has more downside, because it still aligns with my plan, right? The S&P rejected that previous day low. Here, the NASDAQ rejected that previous day low. Netflix was continuing lower as well, right? Rejecting that previous day low as well. So here is the result of trusting my plan. Here is the result of understanding the levels on the market, which all start with watching the futures levels. So if there is one takeaway from today's video, it is to pay attention to the futures. Understand the futures levels, understand the levels that you're looking at. Where's the previous day low, previous day high, previous supply and demand levels, all the things that I talk about in the pre-market live stream every single morning, 100% free. Show up to the live stream. Every level we talked about here in this video came straight from that pre-market live stream. If you want to get my intraday commentary, how we walk through the market completely today, you can join the Discord community where I trade live on a daily basis. Come into the day with a trading plan. Build it off the futures levels on the S&P 500 and the NASDAQ futures. Watch those levels. Watch the supply and demand. I promise that if you start to try to understand this and start to go down that journey of understanding these futures levels, things will start to make more sense to you as a trader and hopefully lead to more success. So thank you guys for watching today's video. If you learned something from it, if you enjoyed it, press that like button, subscribe to the channel. I know not a very long video, but something that I wanted to point out today, how you can build those trading plans, the if-then statements. If you enjoyed it, press that like button, subscribe, and I hope to see you in the next one. Peace.